Going on, motherfuckers? Throwing together a quick update video. This one's going to be pretty brief. Getting this out kind of late, so um, didn't really feel like throwing together a million charts to talk about. But I'm going to cover most of the main points, the most important points that I think we should be looking for, that I'm going to be looking for. Um, that's it. The market's bullish. In case anybody hasn't figured that out yet, the market's bullish. So we'll start with S&P 500, which formed new all-time highs today. After hours, actually, still climbing to the upside, and there's no signs of stopping. The bull cycle on the market has only just begun. Just formed new all-time highs on S&P 500. It is not going to stop. It's going to keep climbing. Upside targets 550 to 650-ish. Guesstimate probably somewhere around a year to get there. And that's it. So we don't have any levels up here, being that we're at all-time highs right now. So just throwing the GANs levels up here, broke the 485 resistance today. After hours, we're sitting above it. It's air up here. The next level we have is 496. I said it yesterday in the Discord. 490 definitely on the table this week for S&P 500. And the next stop, resistance-wise, is 496. So that's what we're going to be looking for. More upside. Wouldn't even be surprised if we gap up tomorrow. And that's it. That's it for SPY. Looks absolutely fucking amazing. Very, very bullish here. So that's it for SPY. All right. Before I get into IWM, I just want to talk about something very quick. I don't care why you're here. I don't care if it's for AMC. I'm assuming most of you it's for AMC. I don't care if it's for GameStop. I don't care if it's for Becky, BKKT, SoFi, Novavax, whatever. It does not matter. Anything small cap, this applies to it, what I'm about to go over with IWM. But before I even get into that, I want to make one other point. So I covered the indices in my last video. So Dow Jones having formed all-time highs in December. It was the first index to form all-time highs, actually, Dow Jones. The second one was NASDAQ, also formed all-time highs in December. The third being S&P 500, formed all-time highs last week and still climbing. All three of those obviously are still climbing upwards. The fourth, Russell 1000, formed all-time highs yesterday. So we have Dow, NASDAQ, S&P 500, Russell 1000. What comes next? Russell 2000, IWM. So let's take a look at IWM's macro, and this is the reason that the memes have not started moving, or anything small cap for that matter, have not gotten into their bull cycles yet. So again, AMC, GME, SoFi, Becky, whatever, Novavax, all of those macros, the smaller caps that everyone is playing, have not yet gotten into their bull cycles like the larger caps, the blue chips, which are climbing towards all-time highs or already there. Because Dow, NASDAQ, S&P 500 are all at all-time highs, they're in their bull cycles already. IWM, Russell 2000, is not, but it is about to be. So let's talk about this, and this is relevant primarily. I'm assuming most of you are here for AMC and GameStop. So this is the most important thing right now for any of you. Anybody holding AMC, anybody holding GameStop, looking for the squeeze, this is the most important thing. I haven't even been watching AMC price action. I threw together a projection for today, hit pretty much perfectly, but I'm just line watching IWM and tracking this, looking for the macro break out of this parallel channel that we've been trading in for 2 years, because that will coincide with macro breaks on the memes. So again, 2 years here in this parallel channel, just bouncing up and down between $200 and $160 roughly, up and down, coming off of the spring, finally formed a higher high. These are all descending, lower highs, finally formed a higher high coming off of the spring, pulled back for the retracement, and is now Ving out of it. And I was comparing this in one of my last videos, would have been last week or the week before that, comparing it to this pattern right here, right before the macro break gap up that you're seeing right here, this gap up, comparing this price action to that, because it's the exact same level, it's the exact same movement. So I want to get into that now. So And again, so let's just, it's very simple. Dow Jones, all-time highs. NASDAQ, all-time highs. S&P 500, all-time highs. Russell 1000, all-time highs. Russell 2000, IWM. What the fuck happens next? I wonder. All-time highs, 250 plus. More than likely, it's going to be seeing $300. So that's what we're looking for. There's a lot of money to be made on this play. I'm just saying. So moving on, I'm going to zoom in now on these two iterations. So this green box right here compared to this one, again, it's the same exact levels that you're seeing, and it's the same exact movement, and we're looking for the same thing, a gap up, a macro break. When we see this 200 plus gap up on IWM, that will be the signal for macro breaks on the meme stocks, AMC, GameStop, SoFi, Becky, whatever. Doesn't matter, all of them. So getting into that now, the side by side. And here it is. And this shit looks fucking amazing. Tracking perfectly. So here's the jet test up. This is the one on the left. So the left screen is the side by side. We're going to be looking at this right here, zoomed in. On the right, we're going to be looking at this right here, zoomed in. Again, same level, same movement. So zooming in, on the left, your jet test up to the top. On the right, your jet test up to the top. Again, these are the same levels. A little bit higher. I think it was like $2 higher in the current cycle, and the dip was a little bit lower, $2 lower, but it's the same movement. So jet test up to the top, jet test up to the top. Come down, find a bounce. Come down, find a bounce, and then you get this double top move that you see here. Pokes a little bit higher on the right, and right here pokes a little bit higher on the right. This wick through right here that you're seeing would be the equivalent of this. Pretty much back up to the middle of the range, and then from there knifing into the spring, and then knifing into the spring. Little choppy down here, forming some higher lows, trying to reclaim support. The green line chopping, higher lows, poking through it, higher low, poke through it, higher low to reclaim support. You reclaim support, and then you rip back up to the middle of the range, a little bit higher than what you're seeing here, and then you pull back, and that is the end of it. Right after that is the gap up, the macro break gap up that we're looking for, which in the current cycle would be a gap up $200 plus. The previous, it gapped over the top of the range. So that would be a gap up past 205, 206 on IWM very soon. So that's what we're looking for. And again, 2021 on the left, right before the meme squeezed. This is your macro break on IWM, Russell 2000, right at 2021, coming off of the spring, reclaim support, and then gap up macro break, and from there it was just pretty much a straight line. There's the gap up, and then there you go, the rest of the move to the top. That we're looking for the same thing over here. So that is what we're going to be looking for on IWM, and again, this happened in 2021. This gap up was actually the day after AMC bottomed. AMC's previous all-time low landmark was January 5th. This gap up was January 6th, and that signaled the run for the memes. And again, 2021, and we're now in 2024, playing out the exact same iteration at the exact same levels, looking for the exact same thing. Macro break gap up, which will signal the run for the memes. So this looks great. Here's another side-by-side. This one's not as relevant, but I thought it was pretty cool. It's just fractal shit. So here is the macro of IWM. It's a daily chart. Versus that same iteration. This side-by-side that I'm showing you here is essentially IWM's macro, just playing out very rapidly. So I'm just showing a side-by-side here. It's just fractal shit. Here's the macro on the left, and here is the iteration that we're going through currently on the right up to today's price action. It's all the same movement. I feel like I really don't need to go through it. Here's the top of the move, top of the jet test. Come down, chopping in the channel. Come down, chopping in the channel, spring at the end, break below slightly. That's the spring. The spring, you reclaim support, back up to the top of the channel, back up to the top of the channel, pull back, and again, we're looking for a gap up on both. The micro and the macro of IWM are synced, and we're looking for the same thing on both. We're looking for a gap up on the micro, which would also gap us up over here on the macro. And then from there, verticality to all-time highs. That's what we're looking for here. So that is pretty much it for that. For the indices, IWM is very, very important. I'm watching it closely. I'm playing it playing calls on it, and I'm looking for a gap up past $200. That will be the signal for the memes. Now, getting into AMC, it's going to be very brief, because I've gone over this numerous times and absolutely nothing has changed. So I'm not even going over the full macro. I'm just going over the downtrend segment, the bear cycle of AMC. So the previous bear cycle of AMC, macro break gap down right here in the blue box, versus the current macro break gap down, sideways consolidation, and then falling off a cliff into the downtrend. And then just going through the downtrend, your first touch on macro resistance, come down second, come down, break below the 200 EMA, to the flat portion, poke out for your third touch, drop back in for your second and third bottom all-time low, break resistance, reclaim the 200 EMA, and a straight line. And again, this happened January 2021, and it's lining up for January of 2024, and the catalyst will be fiber optic bridges. So this looks really good. Yes, we have poked out of the macro resistance now, and we're in the middle of the uptrend. The uptrend that we're in actually is this right here, the channel. That's what we're tracking right now on the micro for AMC. That's what we're currently going through. And as a matter of fact, I didn't chart out GameStop, but it's essentially the exact same thing playing out the channel right now. So that is the full downtrend. Here is the flat portions. I mentioned this in my last video. I cannot see this chart any other way. This is the only thing that makes sense to me fractally for AMC. So I'm going to stick with this. I don't see why I wouldn't. The movement's perfect. I mentioned in my last video, just going over the flat portion, and I named it that when I made my channel because essentially it is flat. Just for the sake of simplicity, I call this the flat portion, but really it's not flat. This is downtrending, as is this. It's just a more drastic W at the end here. But it is downtrending throughout. And it took roughly 1 year in the previous cycle, and in the current cycle, essentially the same thing, roughly 1 year in length. So coming down to your first bottom, choppy, gap up, 3 peaks poking above the 200 EMA. Coming down to the first bottom, choppy, gap up, 3 peaks poking above the 200 EMA. The W move, fake out, the W move, fake out. All the touches of the 200 EMA are perfect. That is the fake out of resistance as well. And then pulling back in for your second bottom, try peak, and then third bottom all-time low. Pulling back in, second bottom, try peak, third bottom all-time low. The third bottom all-time low is in. Once that is in, you get the channel. This uptrend here, very slow, choppy uptrend, versus the current, which is what we're in right now, the slow, choppy uptrend. We broke macro resistance. This uptrend comes to a point, January 15th, and at that point, the downtrend, the bear cycle of AMC concludes, and then you get your macro break gap up. That is what we're looking for, and again, it's going to coincide with IWM. The side-by-side that I showed you here, 2021, macro break gap up, this is when the bottom was in for AMC 3 years ago. It's playing out the exact same pattern at the exact same levels, doing the exact same thing, and we're looking for the same gap up. This signaled the run, this gap up here on IWM, signaled the run for AMC in 2021, and in 2024 now, we're looking for the exact same thing. So that is where we are in this channel here, climbing. Yes, it's a very shitty uptrend, but it is an uptrend, higher highs and higher lows nonetheless, and it will come to a point, and that point will be met more than likely when IWM gaps up. We'll see our macro break as well, and that goes for small caps in general. GME, same story. SoFi, Becky, Novavax, we're all looking for the same thing, which is IWM macro break. So that's the channel. Or the flat portion, I should say. Now, let's look at a side-by-side of the channel, January 2021 channel off of the all-time low landmark versus the January 2024 channel from the all-time low landmark. Look at that side-by-side, and here it is. I threw this together this morning because I didn't make a video yesterday, so I just wanted to see how this would play out tracking-wise, where I had this arrow here, so we have the downtrend to the actual point, the all-time low landmark point, and then you start climbing, and then you break below the channel into your chop zone, which is essentially where we left off on Monday. We broke below it, and I had this arrow here indicating where we were. right here, this arrow here indicating where we were, where today we would have been looking for this spike right back into the top of the channel. And then it's really just a wick. You wick into the channel and then you pull right back underneath. And that's what I was looking for today. And here's the updated side by side now, and that is exactly what we saw today. So we broke below it. We had a jet test early on in the morning to reclaim the channel, or not reclaim it, but poke our head back into the channel, and then we pulled back underneath. Yes, this is uptrending. Yes, this is downtrending, but it is essentially the same exact thing. And I'm going to get into the July iteration now, so which I think is more relevant. Yes, we're in January. Yes, we're tracking the channel, but the July iteration, we were essentially doing the same thing. That's what we were doing. That's what I was doing in July, was tracking the flat portion and the channel from your all-time low landmark. So this would have been the July move here. So this would have been the first bottom of the flat portion, the tri-peak in the middle, which would have been this, and then the second bottom, and then the smaller tri-peak right here. And this was that pre-market wick down when we were looking for an all-time low landmark. We were looking for a lower low here that would have been the all-time low landmark. And then from that point, we were looking for the channel, which is the uptrend out of it, and then the macro break, which is what we saw in July. But it continued the fractal and the downtrend. So I want to look at the July iteration now, and here it is. Here's the spring in July, and then you have this uptrend here, and that would be the all-time low equivalent versus the current all-time low equivalent, the uptrend. You get this crazy-ass crime candle pre-market here that we saw right here. Same exact thing, crime candle pre-market, climb the rest of the way to the top, climb the rest of the way to the top, and then you get into this descending channel. And that is where we are now. The top of this move would be the first touch point on the top of the descending channel that you're seeing here. Come down, choppy, come down, choppy, jet test back up, second touch, jet test back up, second touch, come down, choppy again, lower lows, come down, choppy again, lower lows. This is what we're looking for now. We're essentially at the end. We need one more jet test back up to the top of the channel, which would be roughly 460, plus or minus a few cents. We're looking for roughly 460 here. Third touch, which will then again reject, come down to the midpoint. So reject, come down to the midpoint, find a bounce, and that is it. That is the end, and then from there, we're looking for the gap up. And honestly, this looks like it's lining up for Friday. I'm not throwing any dates out, but it looks like IWM is going to be gapping up in the extremely near future, again, which is the macro break gap up, which will be the signal for us, just like it was in 2021. And at the same time, it looks like AMC is almost there. We need one more touch on the top of this channel here, which will reject roughly 460, pull back, establish support, and that is it for AMC. So this looks very good. That's essentially what I'm looking for. So that's pretty much it for the video. Just a quick recap. SPY is absolutely fucking on a daily basis. Broke 485 resistance after hours today. The next upside level is 496. This thing is going to be on a fucking tear for essentially a year. This SPY will be climbing until the top is met, and then at that point, the market's going to be crashing. But for now, bullish as fuck. So SPY looks great. IWM, we're looking for the breakout of this parallel channel. We've been trading it for 2 years. We're playing out the exact same iteration that we played out in 2021 when we saw the macro break, playing out the exact same thing, looking for the breakout of the channel, and then from there, verticality to all-time highs on IWM. The side-by-side looks absolutely fucking amazing. It really doesn't get any better than this. This looks absolutely fucking perfect. Again, looking for that macro break gap up, which will be the signal for small caps, including memes. AMC, shittiest macro in the market, downtrending all the way to the all-time low landmark. Once it's in, slow choppy uptrend, the channel, until your macro break, and then just straight line. So that's that. And then the channel, you could look at it either way, either perspective. The January 2021, which is where we are, fractally speaking. So here's the updated one here. This is where we are, fractally speaking, but I prefer to use the July, and I'm going to continue to use this. It's probably only going to be a couple days here. Just for our third touch point on the top of the trend, which would actually be the January 15th equivalent, although it wouldn't be a higher high. It would be the January 15th equivalent that we saw in July. We were looking for January 15th this day. This was Friday. We were looking for January 15th this day, a higher high. I remember that. I remember saying this day, right before the gap up, because we were looking, I was calling for this gap up. I was like, okay, today's January 15th. We're looking for a higher high, a pullback, and that's it, a gap up. We didn't get the higher high because the channel was descending, but we pulled back and then we gapped up. We're looking for the exact same thing right here. So it will look a little bit different than the channel of January 2021, but it is essentially the same thing. So that is pretty much it for the video. Nothing really else to talk about. I wanted to keep it brief, 20-minute video anyway. That's it. Things look absolutely fucking great. I might be live tomorrow, depending on pre-market, depending on if IWM gaps up. If I see a pre-market gap on IWM, I will be live tomorrow. Just because of AMC's positioning, I was thinking about this earlier, where we would need to actually get one more touch here on the descending channel, pull back before the break. I'm kind of thinking that IWM doesn't gap up tomorrow just because of that, because I think this will be simultaneous, like the same day. But it is possible IWM gaps up tomorrow and AMC does not, where IWM will get the macro break and then AMC would just finish up the rest of this, get its third touch, and then gap up from there. So that's it. If I see a gap up on IWM tomorrow morning pre-market, more than likely I'll be live. And that's it. Catch you guys in the next one. Peace.